Hi, this is Simon with Trade and Perform Coaching with today's ES Trade Review for September 3rd, 2013. Just a quick disclaimer, this is for educational purposes only. Nothing in my Twitter stream, on my blog, or in this video should be deemed as a trading recommendation. Trading futures is very aggressive and you can lose your entire investment trading futures, so you should consult an investment professional before deciding whether trading futures is right for you. So let's get on to the good stuff. So a couple of things. Last night I did some homework and I posted that on my blog. And in that homework, what I wanted to see is, well, what happened in prior situations on a big gap like this? And I wanted to see several different scenarios. And the reason that I do this is because I wanted to know how the market would react off the open, or how it might react, right, and get a good idea. And while the market doesn't repeat, it often rhymes. And the other part is I wanted to see if I could see a pattern redeveloping. And so I used several potential patterns, but the one that came up and looked to work the best was this one right here, where this was back from the 28th earlier this year, where we gapped. We had a significant gap similar to today. And we pretty much drove right out of the open and straight up, and then we kind of gave it up. And then what really stuck out to me today was that this on this chart was after 11 o'clock, when we had this break and then we based and we got this selling in the afternoon followed by some buying. And this is outside of this is damn similar to what it looked today. Look at our chart today. We opened, we pushed up, and then we drifted lower, and I pointed out that we've been making lower highs and lower lows on a 5-minute chart, and I pointed that out around 10 a.m. And the other thing that I pointed out, and I put in my pre-market trade review that I posted, was that I did not want to short out of the gate. I wanted to see some type of rotation up. I didn't want to be the first in line to short, and the reason for that is very simple. If you shorted on this open, you were basically short 1646, and we got that 4-point drive. Now, maybe if you have a super wide type of stop, you could have survived that. But most traders, most day traders with small size accounts, meaning under $1 million, cannot survive a 4-point trade. Their stops are too tight. And maybe you could say, well, I stopped and I re-entered. But the trick to this whole thing, okay, the trick to staying consistent, the trick that I do is that I don't stop and re-enter. I don't, stop for half a point, then come back in a point later. I don't stop for 2 points, then come back in later, because that kills your account. Like, even if you stop for 2 points, then you come in, you get another trade for 2 points, you're flat. Well, then you need a third trade just to make any money. And that's an awful lot of trading just to make, 2 or 3 points in ES. And so what I imagined when I started this entire process is, couldn't I find a way to trade that would let me enter, have a good clear idea of entry right from the get-go, and be able to consistently reproduce those results of 1 to 2 points a day accurately and with a low stop out rate, meaning a very high success trading. And how can I reproduce that over and over and over and over again? And so what I came up with is a model that allows me to do that. And then when I see changes, like big gaps that we're not used to dealing with, I'll go back and look in history and go, okay, well, here's the potential models, so that while the market's trading, I can have a damn good idea of what's going on. Now, I noticed a couple of things out of the open. Besides driving up this morning, we hit our tick high, at least from the open, and we can expand this here to look at it. We hit tick high pretty much out of the gate in the first 5 minutes, and we just trended down all morning, and we never saw those highs again until we drove up into resistance late in the day, okay, with these 1,000 ticks that we got over here. But look, here's the deal. That's just a clue to the whole part, right? Another piece of that puzzle was over here when we paused right at the back of that zone, that 1650 zone, and then look at the amount of gap that's involved here, right? How much steam and energy are you going to need to push? And I said in pre-market, while I didn't anticipate shorting the open, that I was looking for higher levels. And then importantly, I said if we got below the overnight low of 1642.50, which is right here, that would have been below when the news had struck last night that there had been missiles launched and there was a temporary scare overnight. And I said if we get below that 1642.50, I would become concerned and I would look for half gap or full gap. And so having that roadmap play out for me at this point, even though news came out here at 10:30 in the morning, right? I already knew that once we got below the 1642.50, we already had our rotation out of this zone 2 times, not just once, 2 times for 2 points, once here and a second time here. So this is 3rd time into the zone. I'm very leery at this point. But we get the shakedown, and by the time I find out that this is news driven, we're already coming into this next area of support. And I tweeted out, I'm not taking a long here. I don't like trading news. Why don't I like trading news? Because it's too wide a variable, and I can't control what's going to happen. In this particular case, that paid out because this trade would have been stopped if I had taken the long here. The other thing I look at is time of day. There's all kinds of variables here, but the most important thing for me was holding above last night's low, and when we didn't do that, that was just a big warning sign, and I said as much in the pre-market trade review that I send out to my clients. And so that's kind of how today's day worked out. You know, I don't like buying slants like this. I prefer for them to break and then come back and test and go up. We stopped at the Globex high. We were falling below last week's high, and just nothing made me want to buy here. Now, I did not put in initial support because I suspected if we got down here that we could easily have traded down to Friday's low. But gap fill is often an area where you'll find a 2-point rotation. However, if you look at the time of day that we got here, look at all the basing that we did here. And this gets back to taking a good trade location and accepting your stop. If you took a trade here and you said, well, I'm going to take the middle of the zone, and if we penetrate behind the zone, even by half a point or a point, I'll stop out, you ended up with a losing trade back here. However, if you had an appropriate stop, which for most of my clients is 2 to 3 points behind the back of the zone, right, and you're confident the area you're entering is a strong area, an area where you have a good chance for rotation, then the time it spends there is not going to be a concern for you unless there's some other metric that says you need to get out. But this is middle of the day. It's a slow point of the day. I personally hate trading the middle of the day because it is slow, and I lose the ability just based on price action alone to read what's going to happen in the market. So that's why I focus so much of my efforts in the early morning. So you'll see I had one short from above, one long from below, and then I was pretty much done and out of it for the rest of the day, right? Did I catch the short to the downside? No, I didn't. But did I need it is the question. I just did a spreadsheet and I'm working on it, right? But this is my results since Friday, and these are on trades that I published that I would take or part of my natural trading platform. And I'm going to go back in and fill it in for all of last week. I stopped publishing the trading results because when my father was ill and we had family illnesses going on, and I just couldn't pay enough attention to get a publishable spreadsheet out that didn't reveal all of my internal measures that I keep. And so within that, if you look, so on Friday, on my first trade, I took a 1.25 loss, right? But this is usually how it goes. I'll take a loss, and then I'll have just a consistent series of gains. And all of these were trades I called out on Friday. These are all pre-planned, first touch of the zones, or I called them out separately based on some indicator I saw or some price action I saw or tick divergence. These two trades right here, these are just simply first touch of zones that I take on a regular basis right here. First touch, and you could have even counted this as a first touch with the body pushing down into the zone. They all yielded you 2 points pretty easily, but as it was here and here where the trades took place and gave you a nice easy 2-point run up. So when I look at and how I use my spreadsheet is because I stay consistent in my entries and my exits. I can go back and look at my spreadsheet. I can look at my entries and I can start to see that, oh, even if I take a loss, there's no reason for me to panic. I don't have to turn around and try to make up that loss right away because I know that my next setup is coming. And when my next setup is coming, I know that it'll likely pay. Even if I taken 2 stops back to back, I just simply would have stopped and waited for the next day. And as I fill in that data for all of last week, and then I'll keep putting it up going forward, you'll see on that spreadsheet that while there are losing trades, I know that if I stay consistent with my entries and exits, that I will end up with a very nice, most likely a very nice P&L at the end of the month. So again, that's how I approached the trading today. I was pretty clear cut from the open, and the reason why it looks so easy now, or kind of like, oh, this is how it went, and it was pretty easy to see going through the course of the day, and it was relatively low stress, was because I had done my homework. I had recognized from this prior session that if we got below the overnight lows, which is what had happened here, right, and we had a good chance of basing. Look, this broke down right here this broke down after that base period, and we pretty much had a very similar experience, except it happened closer to here to 11 o'clock, right? Then we had that base out period, then we pushed all the way back up, and then we just didn't get the week close is all that happened. So trades repeat themselves, markets repeat themselves. You just have to find the jigsaw puzzle and the right pieces and put them all together. And by the time you start at night, by getting the right zones, you adjust for the overnight trading action, and then you apply a strategy that lets you take advantage of that edge that you have. And the zones themselves are the edge. I want to make that clear. The zones itself, I don't need an additional indicator, and I don't need confirmation of that zone. I've already had confirmation by doing my homework and coming up with those zones to begin with. So I know that I don't have fear, and then I use that spreadsheet to reaffirm to myself, even if I'm having 1 or 2 difficult days, I'm reaffirming to myself that over a period of 20 or 30 days, I will have net winning trades because my strategy is sound and because I really truly have an edge, and I have a strategy to exploit the edge. So I hope that helped a few people. I don't have a lot more to add. It was a pretty straightforward day. You know, we gapped up, we ran, and then we broke support, and they sold it. So as straightforward as it gets. If you're having a hard time with this market, slow down. This is hard. I also mentioned this morning that random news events are going to be affecting the market over the next couple of weeks. They suck. They can just rip the profits out, and it's a confusing environment. You know, 1 minute we're straight down, the next minute we're straight up, all based on some Syrian thing that none of us can control. So on the upside, I got to say that, you know, they're throwing an awful lot at the market just in general, and it's really not breaking. We're not even down 5% off the highs. So to me, that's overall sign of strength, and I'm not overly bearish. I'm not bullish either, actually. And I'll always say this, and you'll see this. Don't be a bear, don't be a bull, be a hunter, and ambush the hell out of both of them. And the last thing I want to leave you with is if you stay consistent and you stay true to your methodology, you can truly make a lot of money. I'm not in this business to return 10 or 15% annually. Hell, I can buy an ETF that'll give me that and do zero work. Just totally relax. I'm in it to make a lot of money and to really have some pretty fantastic annualized returns. And if you don't have a method for getting your account to the point where it's doing that, you should really consider it. Because just doing this to get a 10 or 20 or 30% return, damn, it's a lot of work and it's a lot of stress just to get that. So anyways, I hope I helped some people out there. My name is Simon. I'm with Trade and Perform Coaching. You can reach me at tradeandperform@gmail.com. You can reach me via Twitter or StockTwits. I hope everyone kicked ass today and made some money. Certainly hope no one got hurt. And I'm looking forward to doing it again tomorrow. Everyone have a good night. Bye-bye.